Hello and welcome to NDTV Profit. You're watching IPO Adda, and my company today in focus is Tolins Tyres. The company is coming out with an IPO which opens on September 9th and closes on September 11th. IPO is priced between 215 to 226 rupees per share. It's a fresh issue of 200 crores and an OFS of 30 crores by the promoters. In total, nearly 25.76% of the equity, post-issue equity is coming in IPO, and the company is valued at roughly 900 crores at the upper end of the price band. The company is into manufacturing of tires and thread rubber, and it's based out of Kerala. And joining me is Mr. R.Sankarakrishnan, who is the whole-time director of the company. Mr. Krishnan, thank you very much for joining us on NDTV Profit.
My pleasure, sir. Thank you for having us here.
To begin with, you're raising 200 crores. Can you take us through the use of proceeds for us?
So the utilization for 200 crores is primarily making the parent company and the subsidiary debt-free to the extent of about 85 crores. About 75 crores is being augmented for additional working capital requirements of the company based on the estimated targeted growth for the company in the ensuing years. And away from the issue expenses, etc., I think we'll be left with about 10 to 15 crores in the general corporate purpose. That's fairly going to be the utilization of 200 crores that's coming into the company.
Give us a sense of your manufacturing facilities and the business model that you have and the geographies that you supply to.
So we have been in operation for about 42 years now. The journey started as a small SSI unit way back, started by Dr. Tolin's father, late Mr. Worky, as a small-scale industry, as a proprietary company, only in thread rubber manufacturing because the proximity to rubber is based in Kerala. Then by 2003, we started manufacturing new tires. Now we are in two verticals, manufacturing of new tires as well as the thread rubber. Thread rubber, we are one of the leading players in the market across the country. And the composition of the business is basically about 75% into thread rubber and 25% into new tires. 2023, we made a milestone acquisition of one of the Seat tires unit in Kerala called Rado Tires, thus ramping up the capacity from about 1,000 tires to 5,000 tires per day. Right now, we are operating at about 5,000 tires of new tire manufacturing capacity and about 17,160 tons of thread rubber. And during 23 and 24 fiscal, we also made some significant strides in bringing the two of the standalone companies within the same promoter holding, family holding. One is a mixing plant called Tolin Rubber Private Limited, which makes the master rubber compound, which is used as an intermediary for tire manufacturing and also thread rubber manufacturing. We have one more unit in Ras Al Khaimah in UAE, which is only manufacturing thread rubber. We thought all these are in synergy with each other. So we thought it fit in the interest of the company, the supply chain, the cost efficiency to bring everything under the same fold. That's how the consolidation of balance sheet has come into place in fiscal 23-24 compared to the earlier years of standalone accounts.
Give me a sense of the kind of capacity that you have, because currently a large portion of that is being sold in Kerala. Do you have, especially I'm talking from a new tires capacity, which you normally do to agricultural OEMs. So give us a sense of how, what is the capacity you're working on, and do you need to build in more capacities as you go in?
Sir, I will answer it in three different ways. First, the sales channel that we operate basically is 5.38% is the OEM and about 74% is the distribution network and depots. We have 8 depots, 3,737 dealership network across the country. And 74% of the sales is routed through the dealership network. About 5.38% is our exports. About 8% is of our van sales. So our sales concentration is widely distributed compared to many of the players in peer comparison in the marketplace. That is our biggest strength. Now, point number two, till about 2023, we had only 1,000 tires per day. So our concentration was good enough only within the Kerala, where we were dominating the market to the extent of about 70-80%. Now, post acquisition of Rado Tires and enhancing the capacity to 5,000 tires per day, and also increasing the capacity utilization and expanded capacity to the extent of 30%. We have been able to penetrate larger markets in India, especially the hilly terrains like Himachal, Northeast, because our tires are known for ruggedness, rigidity, and of very high quality, which even our competitors acknowledge in a big way. 46% of our sales has got restricted to Kerala as a region in 2024, and 56% is the penetration that we have been able to make across exports as well as in the other parts of the country. Going forward, in the next 1 or 2 years, we expect this ratio of concentration within the region to come down to about 20 to 25%, and the remaining 75% will be pan-India and exports.
What is the plan for you to go get into the OEM market? Because currently you are there only from the agricultural equipments point of view. Is there any plan to go into other OEMs, because you do tread rubber for two-wheelers, three-wheelers, and other off-roaders as well?
So till now, we had the constraint in terms of capacity. So agricultural tires was the concentrated area in terms of targeting the OEMs. Now that we have increased the capacity, we have been in discussion with a lot of large players, and as an entity which is very hungry for growth orientation, etc. We are already in talks with some of the major existing players with regard to the original tire supply as OEM, and also in the thread rubber category. And I am sure in the next few months and in the coming years, we will be doing a significant portion of our sales, both in tires, in two-wheelers or three-wheelers, and other than tractors, as well as in thread rubber into OEM category in a big way.
You know, you are coming from a state which has a very limited manufacturing facilities. You can count on your fingertips how many manufacturing facilities are there. How easy is it for you to operate in that state, and do you look to diversify your production beyond Kerala?
Sir, it's a pretty tough environment to actually operate there because, as a policy, there has been a very clear shift and hardly very few manufacturing companies have been able to sustain in that region. That region is basically known for trading, assembling units, and more into jewelry as well as into NBFC kind of business. And when we undertook this major step of getting into the capital market integration, I myself was very surprised that this is going to be the first company to hit the capital market after 16 years. The last issue, which came from a assembling segment of V-Guard, was way back in 2007. And that way, I think it's a very, very bold step and an initiative which I'm sure will inspire a lot of other companies from Kerala to come into the market. Ultimately, for any growth to happen, you need to have the larger integration with the capital market, encompassing the investors at large, for you to consistently keep growing. I'm sure the success, touchwood, of Tolin Tyres proposed IPO will fuel a lot of the promoters from that region to look at the market seriously and also do the sharing of wealth with rest of the markets in India.
While you are situated in a market which is very close to the raw material, which is natural rubber,
Yeah.
how rubber prices have been very fluctuating and volatile. How do you manage that volatility, especially from preventing from hitting your margins? Now that you're coming into the capital markets, protecting margins will be something very important for you.
Last 2 years has been very favorable in terms of the raw material prices, which you must have seen the entire tire industry having been re-rated because of the ban on the Chinese imports and excessive post-COVID demand and the supply being restricted, and the raw material pricing and the crude oil prices being low was all aiding the industry in a significant way. That for the same level of production, many of the companies were able to post a significant manifold increase in PAT, irrespective of the companies in the tire and rubber related products. Uh, Traditionally, we have seen in the last 10 years that there is a tendency that in the off season of the supply getting restricted, especially during the monsoon where the tapping of rubber does not happen. So there is a perk-up artificially during July to August, September is what we normally see. And traditionally, Tolins as a group has been doing excessive stocking when the prices are low because of our research and database and the proximity to the natural rubber center. 70% of the country's requirement is met from Kottayam, which is the nearest place from our factory, is about 30-40 kilometers from there. So the family is well entrenched and known the dynamics and the movement of the commodity. So we have been able to cap it and better to ensure to the maximum possible risk mitigated methods that we are able to protect the margin profiling going forward as well as in the existing operations.
EBITDA margin of nearly 20.4% in FY24. How easy it is for you to scale it up further?
I think if we maintain the margin profiling at this rate itself, will be a very great step in the right direction, because we have significantly moved up in the value chain, and we have significantly moved up in terms of the customer focus, geographical penetration into markets, etc. Our profiling is little better mainly because of the low employee cost, low depreciation, then lower branding and advertising cost, etc. Because of an established player for last 35, 40 years in the red rubber markets. So these are all some of the advantages when you compare it to the big players. And in terms of the profiling of margins, I think we would be comfortable retaining this margin in a risk mitigated and in a scientific manner of 28 to 30% in terms of gross margins, about 18 to 20% in terms of EBITDA, and about 9.5 to 11% in terms of the PAT. And one of the significant factors that has actually helped us in improvement of the margin profiling is also the effective consolidation of the mixing plant, as well as bringing in the non-tax regime oriented Ras Al Khaimah unit also into the consolidation.
How much will RAK plant be contributing to you going forward? Because currently it is only for thread rubber which is there, right? So are you planning to increase production there and maybe go into tire production in that segment?
The group has been into structuring and consolidation mode in the last 2.5 years. And obviously, Ras Al Khaimah unit, which is the debt-free unit, has been a low-profile focus area where we are only operating at about 22.78% of the capacity right now, doing close to about 40 crores of revenue with about 22% of PAT. This is the only unit in the entire Middle East catering to the thread rubber market, not only within the Middle East, but is also exporting to other needy markets nearby in the MENA region. So I personally feel that there is enormous potential which can be unleashed out of this facility, because this is one of the state-of-art facility in Ras Al Khaimah, and very well situated with extreme access to the supply chain, and also in terms of raw material as well as the exports. So there is very good potential, and we see a good ramp up in terms of the production and supplies in the next 2 years to come, as a contribution to the parent company from Ras Al Khaimah in the next couple of years.
Give me a sense of your cash flows as well, because from an operating cash flow point, it was negative. Do you think that going into 25 and 26, you will be able to have operational cash flow positive?
I'm very confident that we'll be cash flow positive. That, as I explained to you earlier, sir, that traditionally the problem with this industry has always been the working capital constraint and long gestation in terms of the inventory holdings and receivables and the incidence of GST, which gets realized over about 100 to 120 days. So it's always the working capital enablement and keeping that management of working capital as the key in terms of protecting the cash. And when we have ramped up the capacity to 4 times more, obviously the incidence of working capital becomes very high. And with medium level of support from the bankers in terms of working capital support so far, so that is what is exactly reflected in terms of the cash flow situation, etc. But with the IPO happening and the liquidity kicking in and the company becoming debt free, I am very confident that from 24, 25 onwards, the company will become cash positive.
What is the kind of follow through that will happen once you pay off your entire debt of 85 crores? Because currently you have got 101 crores of total debt, of which secured is 85 and remaining 15 is working capital, if I'm not wrong. So how much of that will flow through to the profit after tax?
So your parent company is incurring about 11.5 crores of finance cost as per March 24 balance sheet. The subsidiary is incurring about 3 crores close to it. So almost about 13.5 to 14 crores of saving will directly go into the at the cash flow level and will add to the PAT.
Okay. One more question before I leave you. It is about the competition which is there in this market. How easy is it for you to push prices across?
So the competition will continue to be there, and which has been there for the last 40 years as well. When we were a small player, when we were ramping up capacity, but at every point in time of our ramp up of capacity and its utilization, we have demonstrated to the market as well as to the competition that we are here to stay for long and we are here to stay for growth. The only plus point which has gone in favor of Tolins is the consistent maintenance of very high quality of products, whether it is in tire manufacturing or in thread rubber or in bonding gum or vulcanizing solution or flaps or tubes or whatever products that we make. Some of the complaints that have actually come in from the OEM is that we need to reduce on quality.
Okay, so my the question which we were talking about a little while back on the working capital, and you said that how it's going to improve as you go into post the IPO. What about the receivables? Because that's also high. What are you doing to reduce your receivable days?
Normally, the industry per se is about 90 days. I think we are maintaining around that 90-day cycle. Now, with the more aggression and the capacity utilization and our focus into OEMs, mainly in thread rubber as well as in the tire manufacturing capability, with our focus and target what we are likely to close in during this fiscal year, I am pretty confident that we'll be able to cap it to somewhere between about 60 to 75 days of receivables in fiscal year 24-25.
Mr. Shankarakrishnan, thank you very much for joining us on NDTV Profit. Your IPO is opening on September 9th, closes on 11th. Price between 215 to 226 is an IPO of 230 crores, and that capex the value of the company of nearly 900 crores. As he said, it's the first company coming from Kerala in the manufacturing sector after 16 years, so it's a company to watch out for. Thank you.
Thank you so much for your time, sir. Thank you for having Tolins on the channel. Thank you so much.
Thank you.